morning, everybody. Welcome to the Moving Markets Podcast. It is Wednesday, October 1st, 2025. Welcome to the last quarter of the calendar year. It's been a pretty fantastic year up to this point. Hopefully, the last quarter will be as good as the first three, and we'll end the year on a really positive note. We still got 3 months to go. Maybe a little bit too early to talk about the end of the year. Let's talk instead about what's going on today. So it is 8:39 a.m. my time, so Mountain Standard Time. I guess actually technically Mountain Daylight Time, Daylight Savings Time. I hope we get rid of the whole daylight savings things forever. That's just a side note. So the stock market has been open for about an hour and 10 minutes. Nothing is down as far as futures were pointing down, and as far as it's been down at one point. The Dow Jones Industrial Average has moved into positive territory a couple of times today, only briefly. You can see that shortly after the markets opened, everything started to the downside. The Dow climbed, went positive just briefly, went down, touched its low so far of the day. Granted, we're 1 hour in, a little over an hour in, came back, moved into positive territory ever so slightly, back down. Right where it's at now is awfully close to break even. Down 12 points, and that's with a little bit of a delay on it. And the S&P and the NASDAQ are similar, with the exception being that the NASDAQ, I don't believe at any point so far in this first hour of trading, I don't think the NASDAQ has moved into positive territory. It could, and it could do it relatively soon because, everything is moving up. I may not have been watching right at this moment right here. I guess that might have been a brief move into positive territory, but, look, it's down 0.08%, not even 0.1%. So very, very possibly and very easily could go positive before the day is over. Now, let me give you my take really quickly on what's going on, what's driving things, what's causing these markets to be the way that they are. You've got the government shutdown last night at midnight. I've made jokes about it before. I've been serious about it before in terms of how upsetting it is to me. Maybe I'll strike a tone that's somewhere in between right now. It baffles me. It honestly baffles me when we talk about government shutdown, how we talk about non-essential government operations that get shut down. I don't necessarily consider myself a libertarian. I'm very conservative in my politics. I find that in some issues I become more libertarian, maybe making a little bit of a shift from conservative to libertarian in some things, not in all things. But when I hear the term non-essential in relation to government employees and government offices, it really does upset me. In fact, it infuriates me. If a government position, a government office, or a government entity or organization of any kind is non-essential, then we should not have it. It should be gotten rid of. If our government should handle only things that are essential. Now, you could have a massive debate, and I'm not going to take this platform as the time to do it. You could have a massive debate over what is essential and what is not essential. That I understand that. I understand that there's differing views and differing opinions, and people have different ideas on what they consider essential and non-essential. But if as a whole or as a majority, we come to the conclusion that a government agency or a government position is non-essential, what do we have it for? Why aren't we getting rid of it? Why is it around at all? So the shutdown of the government, the reason I got off on that little tangent, the shutdown of the government had everything pointing down pretty dramatically in futures. When I woke up this morning, Dow futures were down 200 points. NASDAQ was almost down 200 points. I don't know if I ever saw it quite down 200, but the NASDAQ futures were also down almost 200 points. S&P futures were down about 30 points. The stock market opened, and I don't remember what the lowest point was that I saw on the Dow Jones Industrial Average, but it really wasn't all that bad. And even by the time the market opened, I think futures were pointing down only about 110, 120 on the Dow. But even even at 120 down, that's not that big a move for a one-day move in the market. Now, these are futures we're talking about. And let's see if we can look at our one day here. I don't see, it looks like today, the lowest point we've been today, 46,276. We opened at 46,366. So what, at 90 points down? Is that right? Maybe only 90 points down at the lowest point of the day from where it opened, if these numbers are right on here. So really hasn't been as bad as what futures were suggesting. And in fact, the Dow might tick positive again. The government shutdown had everything pointing to the downside, but the overall optimism of the market combined with a very poor jobs report. The ADP private payrolls report was expected to show an increase in jobs of 50,000. Instead, it showed a decrease. That's a negative. I know it's really, really small on your screen right there, but that is a negative 32,000. That is bad news if you looked at it as an island. If you just looked at that for what it is, you would say that's bad news. We thought we were going to add 50,000 jobs to the U.S. economy. Instead, we lost 32,000. But what that job loss did was increase the probability of a 25 basis point cut. I mean, we're now at 99% that there will be a 25 basis point cut in the October Fed meeting, and a 1% that it will be 50 basis point. And before that report came out, this number was around 85. It was 15 over here and 0 over here. 15 being rates would stay the same, 85 being a cut. So it increased the betting market odds of a rate cut, both for October and for December. Now this is, almost 90% that we get another 25 basis point cut in December, and January, the number went up for January in terms of what the betting market perceives as the possibility of a rate cut. If you add these together, it spells that the betting market is thinking we're going to get 2 more rate cuts this year, which was hinted towards or even stated at the last Fed meeting, and then backed off of a little bit the next time Jerome Powell spoke. And now it seems to be not just back on the table, but a strong probability because of this weakening job market. You had a stable inflation report. I'd love to see inflation going down more than it is, but it's not going back up in terms of the rate of inflation increasing. Inflation is still happening, but it's not increasing at a rate. And then you've got, combined with that, this weak jobs report, it in a lot of people's minds, that just about guarantees that the Fed is going to cut again in October and in December. So, there's a lot that can happen between now. The October meeting is 2 days from the announcement is 2 days from the last day of the month. So you've got almost the entirety of this month out in front of us. Anything could happen during that time. There's absolutely no guarantee that there's going to be a cut, but the betting market is saying 100% they're betting on there being a cut. So that's what happened this morning, and that's why you've got this kind of these two competing things. You've got a government shutdown, which is perceived as bad for the economy and causes a little bit of panic. It's usually short-lived when it happens, and it happens all the time. I mean, literally, it happens all the time. And then you've got, on the flip side of that, you've got this weak jobs report, which in more normal circumstances, in a market that was not driven by the Fed and by interest rates, that would be perceived as bad news, but it's good news because of the increased probability of a rate cut. So Our new trade, our new trade on Amazon has moved into the profit column by a little bit. Amazon's been really, really flat today. It's been up a little bit. It's been down a little bit. Right now, it's trading just fractionally to the downside, but Amazon has been kind of back and forth. It seems to be holding some support right here in this 217, 218 range. I believe it's going to turn the corner very quickly. I really do. I think the MACD, the RSI, and the 5 and 20-day moving average. I think you're going to look at a longer term support line that feels like it's around 220, even though it has dipped below that a little bit a couple times in the last few days. I think Amazon is about to turn the corner and go up. That's why I'm bullish on this trade. Our other open trades. Look at CrowdStrike. I got to tell you, CrowdStrike started the day today down a little ways. It's up a little bit now. Our CrowdStrike trade is only negative a tiny bit now. Remember, I think this was $2,000 down, and now it's about $200 down. That's on the number of contracts that I'm doing. But if you're in the CrowdStrike trade and you have been in this trade with us from the beginning, maybe you take this as a win and get out. I think between now and the 17th of this month, when the options expire, I think CrowdStrike is going to end up back up by or above $500 a share. I'm going to stick with it as long as it's having a positive day today. If it starts out positive tomorrow, I actually think CrowdStrike, it had that huge surge to the upside, some profit taking, and now this, if it finished today where it's at, this would be the fourth trading day in a row, or at least, let's see, hang on a sec, maybe the fifth trading day in a row, I think. Fourth. This would be the fourth trading day in a row that it would be positive, and I think it'll go back over 500, and I think we'll actually get break even or positive in the trade. I'm staying with it for another day or two at least, but if you feel like getting all the way back to only a small loss compared to what it was is a good thing, and it is. It's a victory of sorts. Then exit the trade and get out. Our Palantir trade is looking fantastic. NVIDIA started the day to the downside. It's up a little bit. Probably going to exit NVIDIA soon. It's hard for me to exit this trade because it is still going up a little bit in value, and that makes it kind of difficult to want to get out of it. But I may be exiting NVIDIA soon. And then, of course, the Palantir trade looks fantastic as well. I'm sticking with Palantir a little bit longer. I'm not overly anxious to close Palantir. I think there's still a tremendous amount of upside to Palantir, and I think there's a good chance we'll be rolling these 190 calls. Palantir trading at 185 right now, up a 1.5%, $2.69. I think Palantir's got some more room to run, so I'm going to allow that one to run. I'm still looking at adjusting some collar trades very soon. I'll probably really get into that in earnest today. And then on our triple play trades, got to keep a super close eye on both Google and JPM. They're both right now holding just above the short call strike. These are both in the money bull call spreads. Google has been flirting with 240 all day long, but I really think 240 is that level of support that Google is going to hold. I don't think it's going to break through there. If it does, we'll adjust or just bail out with a small loss. JP Morgan is a little bit, slightly more removed from the short call strike price, but still much closer than I would like it to be. It's having its third day in a row of a little bit of sell-off, but the moving averages, the RSI, the 5 and 20-day moving averages are not dipping as much as Google. I think JP Morgan's going to be fine. I do think it'll finish the week above 310. So, but we got to watch them close. And then our Nike trade, our double diagonal on Nike. I'm going to have to punch Nike in here real quick. Nike reported they're having a good, strong move to the upside, a little over a 5.5% move to the upside today on Nike. Kind of moving perfect for the trade that we have because it's a double diagonal. If Nike moves above 75, That's a good thing because it'll be incredibly easy to roll the 75 short calls out and up a little bit. If Nike gives us technical crossovers, so we've got a little ways to go on the RSI, a little ways to go on the 5 and 20-day moving average. I think even the MACD has to, and MACD's just about crossing over now. If we get all three technical crossovers, in addition to rolling our short call that's at 75, out and up a little bit, we'll do it kind of a week or 2 weeks at a time. We'll take that 65 short put and we'll also roll it out and up. I'm not going to roll it above 70 and create any kind of a credit spread on that side, but we can get some credit by rolling that right up to 70. We'll wait and make sure that there's not some profit taking on Nike. Nike had kind of a mixed report. They beat top and bottom line, but I'm surprised they're up because of their guidance. They specifically said that they were not super optimistic about sales for the fourth quarter this year, which is traditionally a really, really good quarter. And they're a little squeamish on fourth quarter guidance. So I'm a little bit surprised they're up as much as they are right now, but there's nothing to suggest they couldn't go back towards 80 before the year is over and well ahead of our trade maturing. So we're profitable in Nike right now as we speak, up about 6%. I think this one will easily go to 15, maybe 20%, but probably with an adjustment. So we'll keep an eye on that for the rest of this week. Hopefully by Thursday or Friday, if Nike just continues to press up towards 76, 77, 78 by the end of this week, we'll be able to get out and just take some profit at the end of the week and not worry about adjusting. All right, that's what I have for today. I'm going to wrap up right there. Tomorrow and Friday, expect this podcast to be towards the close of the market instead of the open. I just had to do it a little bit earlier because of some afternoon commitments yesterday and today. But tomorrow I will be in front of the computer as the market closes and probably do the podcast right around that time. All right. Thanks, everybody. Have a great rest of your Wednesday. Bye-bye.